Alrighty, Doc from North America. Where are we at? Okay, because we're starting. It is Wednesday. It's already halfway through the week. You can see the markets have tried to turn. You can see here we're starting off the dollar index. You can see that strength right there. Oh, let me start the chat line. Let's see what's going on here on the chat line. It's getting close. There it is. Okay, there. Wrong button. There we go. Now we're there. Okay. And the chat line looks clear at the moment. All right. There we go. So the dollar is trying to bounce up a little bit. I guess, we've seen really strange action. Yesterday, first day of the year, we saw the... let me just go over to it instead of me telling you about it. There's the 30-year. You can see this. When this rises right here, means that the interest rate is going down. So what we see here is we've slid into the weekly sell here. We go instantly into the daily buy, so we're in neutral. Oh, here comes a sneeze. Excuse me. And so we have interest rates. Excuse me again. You have interest rates rising. And I'm sorry, interest rates dropping, the price of the bond rising. Okay, so interest rates are dropping when this thing rises up. But at the same time, we have it dropping underneath, so it's trying to tell us it's kind of trapped in some type of confusion. A little bit longer term money is thinking no. In a day-to-day basis, they're saying yeah, they want to own the bonds because they think that they're going to become even more valuable and interest rates are going to drop. And then we go and look at yesterday's action right here on Chicago. Was it J4X here with the dollar index, the DXY? You see this trying to move up. So we got one move in one direction. We've got one move in another direction. It's just like the noise is everywhere. In other words, we see a lot of noise, a lot of confusion out of all this action here. I got an email this morning that plays right into this, and the email said to me from a trader that's been around, I don't know, 70 years, 80 years, something like that. And he said, what did he say? Can't remember the last time market opinions have been this bifurcated. In other words, they've been so confused and mixed by so many people, basically, so many different points of view. Bloomberg guests are all over the place. Good trading market. That's how he looked at it this morning at, what's that, almost 4 hours ago now? At 4 o'clock a.m. Eastern Standard, which is like an hour and a half after the London Open. So, the old traders are even, older than I, are looking at this and going, wow, it's all over the place. There's no describing the level of confusion at this point in time. And that seems to be the reality of all of it at this point. Now let's take a look at the other index of representing the dollar. Right there. You see the pressure on that this morning. It's in a daily sell from right here. We were showing you with that big long box how sideways this action had been. And that should be a... Let's see, that's a buy. That should be moved out of the way. And there's a sell. Okay, so that's where it is right there. Just got moved around. And at the same time, you can see the weekly is trying to lift up a little bit. I don't find this... I've been convinced that the dollar is going to go down against the pairs mainly because we believe that interest rates are going to stay sideways to down, the rates themselves. So when I see some strength, I'm a little surprised in some aspect, but then I know it's a market and it's always going to ebb and flow. Know it's always going to go up and down on some level, but the overall trend should be on the downside. That's where my head is at with this. So from there, we'll drift over to the euro, which makes it even more clearer, I guess you could say. Here's the euro right there against the dollar. This last couple of days, it's been going down. Let's put it up over here. There we are. And you can see there, it's up today versus yesterday, but still the math is pressing down. And you can see the weekly right there, has drifted down close to the zero line, is trying to lift back up again. Hasn't broken it, but it has drifted down to it. So that pressure on the product itself, as you can see here, we went into the buy here, and we're flirting with the weekly sell there, and at the same time, the daily is trying to lift back up again. So this, there's not a lot of confidence or a lot of direction when it comes to the interest rates. Some are talking about the idea that they think that that there is not going to be a recession because everybody thinks there's going to be a recession. I mean, we had a recession 6 months ago and we couldn't get half the people to believe it, even when we had it. So, there's a lot of strange, as my friend said, bifurcation. In other words, there's mixed up in every direction. There's not a real clear direction, and that's what we're probably seeing. We saw yesterday the gap, the stock market up. It closes down for the day, and I thought for sure it was going to find a way to dig its way back up. This morning, it's digging its way back up again, and we'll see how long that lasts. If the buyers come in, there's just a lot of different directions here. Money's going to be committing itself one way or the other. Funds are going to be nibbling more or building their positions more, or they're just going to stop and they're not, which is kind of hard to believe because they're paid to actually be long more than they are paid to be short. So something like 10-to-1 ratio. They're basically recommendations always to be long versus recommendations to be short. So, all right, that is the action of the euro right there. So we might as well just drift into the cable from here. And there's the cable. And cable has done the same thing. And let's put it up on J4X. Let's see, right there. And you can see that pressure, trying to work its way down on J4X. You can see the green line dancing around the dash line right there. And we have that same situation going on right here, where it's going into a sell, and at the same time, it's lifting back up again. And we slid into the weekly sell, and it's, already challenging the bottom part of the manifold here on the weekly side of it. So, I mean, it's just, talk about just flat out confusion in every direction. So we just obviously trust the math and watch the action, and that's pretty much the way it always usually is around here. But we're always trying to we're always trying to identify. We're always trying to identify what the real story is. In this case here, there's no clarity whatsoever. There's no conviction. Money's not sure if they want to, start dollar cost averaging in and building their position or standing to the side. I mean, it just goes on and on and on like that. Tea time. All right. So from there, we slip over to the Swiss. And you can see that nice big pop. At least it's marching now in the right direction with the rest of the major pairs trades. And you see here they put it into a buy, still holding up, but it is down for the day. At the same time, we are still in that weekly sell from this action up in here. So, again, you couldn't identify it more than what it is, and that is a lot of confusion here. And then, let's see, right there it is right there, the CAD. And let's just take a look at it on a weekly basis too here. There it is. Look at that long slide. Just like here, the long slide from the top. Just down, down, down. So the pressure, in any simple way of understanding it, is that money is confused and lost and not sure if they want to get long and try to dollar cost average in, which that's what they're paid to do, or stand to the side and wait for another low. And the longer you wait for a low that doesn't come, becomes even more of a problem. Because, the idea is, someone was asking me, I guess last week, about what was it? The black pools and the hidden trading that goes on. And I said, well, there's like 47 different exchanges now. 47 ECMs, and they report. They don't always report when they're supposed to report transactions. Because they don't want to get orders stepped on. They don't want someone to, someone gets an idea, they want to buy something. They don't want the market buying it just because they're buying it. They want to buy it without anybody knowing that they're buying it. And that is mainly the process of why there are these black pools and so forth. And since we're so much down, we've been so down in volume since 2008, since the beginning of quantitative easing and the world economy crash, that they allow the black pools to function the way they do, even when they're not following instruction or not following the law. So. All right, and then from there we drift over to the yen, which has been marching along very well with the Swiss. You see here, it's still in the sell. It did not go into a buy. They tried to perk it up. It's doing better than the Swiss even. This matter of fact, what's interesting is the yen itself seems to be, what's the best way to describe it? It seems to be falling back the way it should. In other words, whatever calamity that was going on with it that drove it from 115 to 151, 152, was that 151, almost 152? Whatever drove that force, that pressure on it, let's just tighten it up there a little bit. Whatever issues it was, inflation, increased interest rates in the States, collapse of a Swiss corporate bank, whatever it was, it had matched itself with the Swiss. So the yen and the Swiss, we mentioned this over and over. The yen and the Swiss, for some reason, marched together for a while there when the other major currencies were going in the other direction. And so that seems to be over with, and it seems like they're coming back down to the range again, moving back into that comfort range. All right. Let's see, we widen that out like so again. And we'll put the yen over here. We'll see what it looks like on a weekly. There's that weekly, that long glide that you have here. We have the same thing right here, same glide down. And then let's go to the daily on that. Right there. You can see we've been in the sell for a couple days. It's doing the same thing here. And you can see we are at the bottom end of the range on the J4X at the moment. And you can see ours is trying to turn up also. And this is just starting to turn right here. You see that too. So we're seeing some action in that direction, but overall it seems like it's very comfortable down here to just go sideways to, I would think we'd fall back to the 125 area. We said we've been looking for that for the last couple of days. We got down to 129, is it? 129.5. So we'll see if they kind of start to hesitate in this area like that, just trade along. It would make sense to me if that's what happened. It just, zigzag down in here for a while, then, get into some type of, challenge to the zero line, which is very close on the weekly to begin with. Let's see what it looks like right here. And there's that weekly there. That's the long slide. So, they've been following their rules pretty well, which has been very interesting. Following its own way. From there, let's jump over to the Turkish lira. There it is right there. Lifting back up again, but in a daily sell for the second day now. The weekly's been very strong for a while now, since since October. It's been in that weekly buy. And we've had some of those odd volatility days, but overall it's really coming from the low 18s to the 20 area. Not too bad, for this poor product, who's been beat up probably worst out of all the industrial nations. And minus obviously China, which doesn't have a currency at all, so we can't even tell. They have a yuan that they fix, but it's not a trading currency like the Turkish lira or the U.S. dollar or the British pound and so forth. But that is, out of the industrial nations, this is the most that's getting beat up. Where the currency itself has gone from 10 years ago to $1 to $1 or €1 to now to €20. So it's a pretty earth-shattering situation that's going on in that country. All right, let's do the tea time again, since no one's asking any questions. There we go. All right. From there, we drift over to the two currencies that look, or let's say march along with their commodity. In this case here, the Canadian, which is, that was interesting buy number right there on the Friday before the end of the year. A pop on Monday, or I guess in this case here, Tuesday. And now today, breaking right back down again. We're in the weekly buy for a fifth week. And let's go over to here. There's the CAD. And at the same time, with this pressure on the product, we expect to see a downwardly action on the oil market. So let's see what West Texas Intermediate looks like today. Right there, still pressing down for a second day. And playing with the weekly sell as we speak. Right there. And it's the winter time, and we don't really have a lot of driving going on, and a lot of people are kind of more stationary, and there's a lot of interesting directions being taken this time of the year. In other words, with the fuel market. Not something to get too crazy about when you see it go up and down, because that's the natural tendency of it. So, it's the action will really start to come in over the next, I guess you say, the next month and a half, and that's probably why the contango. This is the front month trading at 74.31 as we speak, and we've seen where they've tightened the back months up to the same price, almost at parity. Here's 74.82, and so 74.82 and 74. There's a 50 cent premium now in the back month. So the pressure is telling us that in months to come, oil is going to be more expensive, not less expensive. Against the front month, of course. So that will be relative, like that Al Einstein thing. But what it really comes down to is you're getting back months showing much more premium because they know that the price will be higher. All right, and then from there, we drift over to the South African Rand. Right there. You can see it's pressing down today, which makes sense since we've been watching gold press up. And then we'll stick gold up over here. You can see gold has reached as high today as 1871. So, and right now it's about $11 off the high of the day. A little more than $11. And you can see daily buy right there, weekly buy for a while since the 1650 area, 1640 area. We've been in a weekly buy right around there. And over here, you see that same, that's the weekly. You see what the daily looks like right there. And you can see, matter of fact, they have spot. What is it? Oh, that's South African Rand, right? So it's moving down. And we look at it here. It's breaking that political triangle that we've talked about. right there. You see it's breaking down in here, and it's in that cell for these days here. And this political triangle is finally calming down. I guess they've resolved whatever they're going to resolve. And I think that has to be moved down, right? Right there, like that. Because it was in a buy. And I guess, what is that there? That is a plus, isn't it? No, it's a minus. Okay, so it did go into a sell, goes back into a buy. This politics has really gotten this thing all over the place. So there's the sell, there's the buy, and now we are back in the sell again. There we are. There we are. So this political triangle may be finally ending, which is nice. I don't know what resolution they've come up with in the South African presidential situation, but more than likely it'll be like everything else. It'll just go to the wayside. Anything connected to the ANC and the labor union seem to go that way. The law doesn't necessarily always survive. From there, we look at the Mexican peso. You see it's breaking down again in that little cell there, and it's flirting with the weekly cell right there as we speak. And then let's take a look at it right here. Right there. And we do think that we do think that this is politically more motivated than most things. When we look at the Mexican peso, I think they benefit from a healthy America, and so that becomes, when it's going down, it's obviously gaining against the dollar, and so we keep on seeing this thing try to flirt underneath the 2.5-year range, and that's what that white dotted line is right here is the 2.5-year range, and it's broken underneath it a few times, but found a way to climb back up on it. And you can see here, and then it's Fibonacci to the top end of the range. And so we are at the bottom end of the range, saying they're looking at it and they're seeing what the Congress is doing. They're trying to get the House of Representatives leadership set to something, I guess you could call it healthy. And so the debate is being seen for the first time in a while because the Democrats controlled the place, so there was nobody on the floors. Matter of fact, Mrs. Pelosi was allowed to vote for everybody. Very weird. So, and that is the currencies. Unless someone wants to see something in the currencies, I'm going back to having a sip of my tea again. All right. From there, we drift over to the, what we were looking at, gold, was it? I think so. So we'll look at the metals complex. Let's see who's dinging here. Let's see. So there's the Mexican peso. Let's put gold up there. Right there, there's gold, showing that strength that's in it at the moment. And you can see it's at the top end of its range. Over here on Chicago Quant, same situation, running high. You can see it right there, at the peaks. And the weekly is holding up extremely strong on top of the manifold itself. All right, and then let's see. Let's take a look at the weekly of it. Excuse me. Right there. So there's the weekly. Okay. Excuse me. I'm taking a sip of tea. Beef fluffy egg whites. There we go. All right. Oh, you know, I haven't even checked my volume. No one's complaining, so obviously my volume must be there. Yep, yep. No, there's no problem there. Good. All right. So from the gold, we'll take a look at silver. Right there. Silver was holding up pretty well. Yesterday it was kind of interesting how they sold it down. It was lifting this morning when I first looked at it. Right there. Yeah, you can see it didn't take out yesterday's high. Look at that little green dot just appeared. That's cute. And yesterday's, whereas gold closed plus for the day, silver did not. I mean, it was plus from the previous day, but it was at the lows of the day that it closed. Look at that, down near the bottom of it. And now today, you know, it's trading higher than yesterday. And this is the March contract, and our high today was 64. Yesterday's high was 77. Thought it had a lot more push in it. Now, we didn't have this morning when we sent the charts out. And now, notice the little green dot is even gone. And we are flirting with the daily sell as we speak. We'll throw that up there like that. And you can see the weekly is through the manifold right there. So it's a little pressure on that. Silver, you know, is trying to be strong. Hey, Robin. Yep, it's fine. Good, good, good. It's a quiet day, isn't it? Isn't it something? I'm going to suck on some tea again. Yeah, it's just it's kind of like a no interest day. Maybe some people come in after the hour. I notice we get some people rolling in around 8 o'clock my time, 7 o'clock your time. And so silver has been holding up fairly well. Can't complain about it. I mean, it went into the weekly buy back in the 19 area. So we're figuring that you know, it's got more energy left in it. We still think it's going to see the 25s. So, all right, and then from there we check out copper. You see copper is rolling over pretty well. You see even it's threatening the weekly. It had been in that weekly buy since back here in what was that, October? Yeah, October. So, you know, it's gone from the 340s area to the, what's that high right there? 383, 394 area. There, right there, when it first popped into the weekly buy, ran all the way up to 393. So, you know, I guess there's like this hope. Hope is eternal. Everybody thinks that, you know, if China will get going again, they'll pull the world economy forward with the United States. I myself don't see any of that. I think that's some type of fantasy because, you know, when you look at it historically, all we did is when we plowed $300 or $400 billion into China, it came out, and that's the money that was spent, not like innovation and development, but more like, you know, cheap products and so forth. So I'm not convinced that China is going to help the world economy whatsoever. But it may give, you know, energy into the whole system itself. Tea time again. That's really what it comes down to. Is that if money really thinks that China can carry the world market a little bit and help it to get going, that's a positive thing. But they'll learn their lesson that it's not really moving the world economy unless America puts that money into China first. Very strange situation there. I don't understand how people don't understand that. All they keep on looking at is 1.5 billion people to sell to. But for some reason, the 2 billion in the Commonwealth is not looked at as an important factor. I don't know. I don't understand that at all. You know, good marketing, I guess. All right. And let's put the copper up on J4X too at the same time. There it is. Kathy Woods just put out a statement, I see. Kathy Wood says Tesla stock still has miles to run. Good for her. I know she bought $100 million worth yesterday. All right, and so copper, you can see that action we're seeing in the copper. And normally we look at platinum on a Wednesday. We see platinum 3 or 4 times a week, actually. Let's take a look at the platinum since no one's here. I want to know where platinum is. And I guess we're getting ready to move to the... let me just see which contract has more volume in it at this point. Where's that mouse at? Get rid of that. And let's see what the contract says when it comes to platinum. And which one is the front month? Oh yeah, April is the front month by country mile. So we're going to change that right here, right now. And I guess some people here are saying, what is a country mile? It means that when you're out in the country, you live in the cattle country, farm country like me, and someone says it's right down the road, it could be 3 miles away. Whereas when you're in your city and someone says it's right down the block, it might be a block away. Yeah, so in other words, it's more precise. Out here in the country, when we say, oh, it's right down the road, it could be anything, 3 miles, 4 miles, 7 miles, something like that. Oh, not far, just down the road. Yeah. All right, let's find platinum here. There it is. This is going to be interesting. Wait a minute. It is April. We are in the right contract. Okay, so we switched that contract a while ago. Yeah, J is April, right? Cancel. Cancel. Oh, wait a second. The top one is... No, they're not J. They're F. So let's format that. I gotta add it. Bummer. I thought I had it in there. What's that? PL? PL. But April is definitely the action month now. But I mean, they have volume yesterday was 15 in January, and April had 6,247. So, oh yeah, that's definitely different. Okay. So that's there. Add. Okay. Close. There we are. Let's slide that in. And it's trading same way. That's interesting. It's same price. And it's just flirting with that $1,100 area. Let's see. Did the weekly ever go? And I guess it did. It did slide into that weekly back here to the sell. Went into the buy here. It led the market up. Went into the weekly buy here in the 950 area. Then it went into the sell there, and the following week went right back into the buy, and that's when we were saying buy, 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 silver and gold. So we can fix this. So there is the buy and the buy, and then there is the sell. So you can see here it's still holding up nice. It's broken through the 1100 area. Yeah, $1,112. Nice. And let's put this in there to say what it is. It's April Plat. April Plat. There. Let's just save that. Right there. Cancel. Cancel. Save workspace. There we go. That's better. And save. Yes. There we go. Excellent. All right. Now we see the better action too. Matter of fact, I think daily buy is like 1 day back further even right there. And no, it's not. That was still in a sell. So there was the buy right there. They zigzagged it there the next day and then off to the races. And then we jumped into the weekly buy at the same time right here in the $1,000 area, and now we're $100 higher. All right. Let's see. From there, where do we go from there? We go to the energy sector. So let's take a look at North Sea oil right there, trading in the 79 area. We were at 85 yesterday at one point, 85, and now we are at 79. There we go. And as we said, we looked at the back month crude as I take a sip of my tea again. And that contango is really clear. As you can see right there, in Brent, it's underneath the 80 by the hair, but it's below the 80. And here we're at under 75. And I would imagine we might be over 75 in the back month at the moment. Let's just see. Yeah, 75, 28, 23 now, 24. So, the back months are holding their price better. But both are flirting. The front month and the back month are flirting very easily with a weekly sell. All right, now from there, we slide into, let's see, what do we do? Go to natural gas. Saw a great headline this morning on the natural gas. The United States now is equal with the largest exporter of natural gas in the world. So the United States and I guess it's like Qatar or something like that are major exporters now. We equally exported the same amount last year in 2022, and I know that they're trying to shut things down at the same time here in the States, so it's really odd. But I guess demand is demand and profits are profits. So sooner or later they win out over government crazy, and so Mr. Biden has tried to stop the natural gas export and regular crude oil export, but natural gas is winning out. As we sip our tea again, because the reason why they win out is that there's, the pipelines are already set. The natural gas is flowing through them, and so they just have to put them on ships and ship them out. Whereas he's blocking actual drilling of crude oil. So we're about 4 million barrels down from where we could be, which is a big number in this world economy. Would really help kill inflation, that's for sure. From the natural gas, we drift over. Oh, did we get natural gas in there? Let's get natural gas up on J4X too. And that's the weekly on Brent. Let's go to daily right there. See that downward pressure topping out and rolling over. And then the natural gas situation, right? Is that it? That's the Spanish company right there. And where's the American natural gas? Not there, right there. There's natural gas in the United States. See it trading at 3.9 now. We're under $4. And for Europe, I'm just guessing they may be in the 25s or 26s, something like that. We see that the Spanish company that provides natural gas. Let's see, where's it at? Right there. No, that's not it. That's it right there. It's right underneath it. is trading in the 24s, the mid 24s now. So that will probably is the best way to see what Europe is paying from outside the United States, outside Europe itself, the United States of Europe or the European Union, however you want to call it. And you can see that long slide in that stock where it came down from the 27s and 28s to down to the 24s. And the same thing goes on with natural gas when we put nat gas back up there again, like so. There's the natural gas. It's got that same glide down, which is good. It's winter time. We're probably going to get some good cold snaps over the next couple weeks. Right now we're in the what is it? We're going to like 20. Is it really 20? No. We're going to like 18 Celsius today. 18 Celsius. So, that's pretty good for January around here. It's not we're not getting record warm, but we are definitely getting record cold. That's for sure. So yeah, we could be as high as was that 18? It would be 36. Yeah, we could be as high as 18 today in Celsius. That's pretty good. And partial sunshine. All right. So that's pretty much looking at the energies, and we've seen the what was the other one? Energies and metals. We've seen both. So both of those areas. What we'll do is we'll drift in and take a look at the stock indices at this point and see what they're up to. I'm just double checking. Looks like tomorrow will get up into the 16 Celsius. And then see what the projection is for Friday. And Friday we're looking at basically 14, maybe 13 Celsius on Friday. All right, get rid of that, minimize that, and let's drift over to here. And there is right there is the S&P 500. You see it's been in a buy intraday now from here, moved up to 66. Right now we're trading at 60 and a quarter. That's 3,860.75 as you see right there. See that right there? There's 50. There's 25. Let's put S&P 500 up on J4X. Right there. See it trading also at 380. What is that? 380.60. See that right there? Not sure what's going on there. What's that? 338.38. What is that? A little confused by that action, but we'll see if we can figure that out. Widen it out. And there's the daily. I don't think that's hinky, is it? Maybe that's hinky. So if we go like that. No, that's kind of odd. Okay. All right. So over here, we're showing you live. You can see that. It's where's it at? Right there. 380, 3,860.50 right there. Just tick from quarter to half. The high today is 66. So we are seeing some pressure there. When we look at the daily itself, you can see it's trying to press up. It's up for the day from yesterday's close. You can see that right there. When we go to the hinkies, there it is right there. Still showing a little pressure for today. We'll see as the hours go on if they even hold up here. Then what else we do? Oh, now let's take a look at it on the daily itself. And there's the daily. And you can see here it's doing the same thing higher. It's at 3,860, now 59.75. It's bouncing around. You can see it's been a daily sell since, where is it at? Since here, obviously. Because we have that red and green there. So it's been down there. I'm not sure why it was there. We'll have to double check what that was. We got that buy for a day and it put us into a sell. What was that? That was like last Monday. That was, or last Tuesday. It was last Tuesday. So it's a week ago. And it's been bouncing around, trying to get into the buy, failing. And you can see the weekly pressure right there at the same time. So the stock indices themselves are not exactly representing confidence, but it does look like a bottom. At least for the moment, it looks like a bottom. I think we'll have a sip of our tea since no one's really asking any questions. And then let's take a look at the Tech 100. The index that has all the tech companies in it, right there, playing with 11,000. Let's check it out over here. This is the futures contract right there. We're 11,018 as we speak. You see that right there. We're trying to lift up. We went into a sell yesterday, and it's still minus by 75 right there. You see the little red thing going on right here. And that weekly, same situation, 4 weeks in a sell. The pressure is on there too. I see some people coming in. That's good. Remember, traders, you can ask any question you would like. And as the Dow Jones Industrial Average right there, you see that's trying to lift up for the last couple of days, which is, interesting in its own right. It has been the better performer. Let's put it that way. Let's look at it this way instead. The way I look at it over the weekends. Right there and right there. You can see it's trying to lift up and stay with that red line that we measure by inside and outside days. That's what we measure these lines for. And as you can see here, it was above the zero line right there, but actually it actually closed in a daily buy yesterday. That's interesting. So there is right there, daily buy, because there's no dot to it. And today it's moving a little bit higher than yesterday, trying to get back up into that little triangle, upwardly triangle. We'll see what they do with that. The weekly itself, you can see, is 4 weeks. 4 weeks in a sell, like the other stock indices. Oh, there we go. We got somebody. Hey, how you doing, Musaf? What settings would you recommend for a daily stochastic? Do you think RSI stochastic is more flexible than the normal one? I am a big fan of slow and fast stochastics. Let's show you. We'll put it up right here. So here we are, and we're going to show you the slow stochastic is the dashed line. And we're going to hit edit, and you'll be able to see the data. And all we're reflecting is the slow D right there. That's all we watch is the slow D when we go into output. There it is right there, slow D. See? That's all we're following. The other one is invisible. Then we look at the fast stochastic, which is the green line. We'll hit the edit on that. And you can see here that is the same, a 5.3. And we take a look at the input, and there it is a fast D. We're not paying attention to the Ks. And that's the best combination. RSI, I'm not a big fan of RSI or MACD because I find them lagging when you run a fast and slow stochastic against each other. So I steer clear of MACD and RSI because they're just slower. They're compared. In other words, when you look at like the almanac of indicators, they'll tell you that the MACD is a leading indicator, or the RSI is a leading indicator, and they'll say that the Stochastic is a lagging indicator. But when you put two stochastics together, a fast and a slow, and follow the D, you find that it outperforms the MACD by about, I don't know, like 30%, which is pretty big. 1/3 more accurate. That's a big number. So I recommend that combination, and you'll be able to go back and look at the video and see the exact inputs that I just showed you that I put up on the screen. How's that? Does that answer your question? And then what we do is we combined it with the Hinky-Ashke bars because they emulate our dots on about a 68% average. So accuracy rate. So I hope that answered your question there. Then moving averages are the only big moving averages like the 50 and the 200 day people pay attention to. Money is watching it, so that's the only reason to pay attention to it. I'm not a big fan of moving averages, but I don't have a problem, using them correctly if I can find something. Like I use the moving average inside my mathematics. To a great extent, that's what this is. When looking at let's see, let's widen this out. So let's see, if I go like that, and you're looking at these lines here, they're a moving average. That's what that is. A moving average of my mathematics itself. So it's a layer on top of a layer, which smooths things out dramatically. That's what a moving average usually does. It smooths things out. Cool. Glad to be able to answer a question. No problem at all. Let's see, where else do we go? So that is, and the last one where we watch is the Russell 2000. And we'll drift over to Bitcoin too. We'll take a look at that because we do believe that the cryptos lead the stock indices anymore. They seem to be, if it wasn't for that FTX, they'd be even more dramatic, I would think, in its action. Let's see, where is it at? Bitcoin is almost at the top, I think, isn't it? Right there, there's Bitcoin. And you can see it's trying to break through the 17,000. Let's take a look at it over on Chicago Quant too. Not there. Let's close that. Save workspace like so. Close workspace. There we are. You know what? I want to save that too. Well, I got it open. Let's do that. Let's save that. Excuse me. Save picture. There we are. Now I'll close it. There we go. Now, let's put Bitcoin up there. Let's see what she's doing live. Right there. And you can see she's trading at 16,800 right there as we speak. There is that, slow, soft pressure on the upside. In a daily buy for 3 days, in a weekly buy for 4 weeks. It's doing its best to lift up. Kind of interesting in the fact that it's in a weekly buy and the stock indices are in weekly sells. The question is, do the stock indices get into a weekly buy or do they rally at all? I mean, if they rally, it'll be just another example again how the cryptos, or this crypto in particular, the the Bitcoin itself, which we think is the best of the cryptos because it seems to be the most visible. And anything that's visible is usually pretty good. In other words, when you can see it all the time, that's usually a very good sign, not a negative sign there. So, all right. From there, we can look at the Russell since it's almost over with. And the Russell is a manifestation of speculative stocks. In other words, they are the low caps in the United States. They are what the Nasdaq used to be. Now the Tech 100 is the what do you call it? Now that's interesting. You see, it's trying to go up, but at the same time, the algorithm is pressing underneath. So we'll see if they really jack this thing up and try to take out yesterday's highs. Again, that's also 4 weeks in a weekly sell. And this is the most. These are the low caps. I think that there 1,000 of these companies probably won't even exist in 5 years, but they'll be replaced as time goes on with new companies. And somebody in there in the Russell 2000 is a Microsoft. Somebody in there is a Apple. Someone in there is a Tesla. So forth and so on. There's some good companies in there. We just don't know which one it is yet, and we'll learn it through the price appreciation over time. And they break out and they get put into the 2000 or something like that. Or I'm sorry, the 100. But at this point in time, that's what the Russell's made up of, companies that are like $500 million in cap weighted, up to, I think, $3 billion. I think that's how they measured them, which in these times is not hard to be cap weighted like that. All right, traders, I guess that's the end of the day for us. We got to come up with a title for today. What should we call what today was? We talked about pretty much how the market overall is just chopping sideways with a lot of conflict. So markets are in confusion. I guess that would be the best way to describe it. Markets are in confusion. And that's really what it comes down to. Very bifurcated, I think that's how they say it. And so what we'll do is we'll see how tomorrow brings. We watch our math, to see if, it's going to give us an insight to the future actions. And we'll go from there. So, happy trails to you until we meet again, which, can you believe it? It'll be Thursday. We're climbing into the end of the week already. Happy trails to you, to all our trading friends. All right, traders, have a nice and safe, smart day. Catch yous later.